Now, earlier we reported on China's trade figures and their ramifications for Korea, and the world's second biggest economy is turning away from so-called processing trade and pushing to expand its domestic supply of intermediary goods. But with these kind of goods accounting for the vast majority of Korea's exports to China, this could spell big trouble for Korea in the months and years to come. Kim Min-ji reports.
Could Korea's already slowing exports head further downhill? The Bank of Korea says it's likely as China continues to move away from so-called processing trade. Processing trade refers to importing raw auxiliary materials and parts from overseas and re-exporting the finished product after manufacturing it. China used this model to achieve its startling economic growth since the 1970s, taking advantage of its cheap labor resources. However, China has been trying to shift its focus as it's not a value-creating model. Processing trade made up more than half of China's trade in 1998, but that figure had fallen to just under 33% as of last year. That's worrisome as Korea's exports to China are still mainly focused on intermediary products. As of the end of last year, 73% of Korea's exports to China were intermediary goods, while consumer goods accounted for a mere 7%. Until 2000, when China's trade rose by 1 percentage point, Korea's would rise about half a percentage point, but since 2012, the growth rate has halved.
Not only is China contracting the size of its processing trade, it's expanding its domestic supply of intermediary goods, which will hurt Korean exporters.
Korea's exports have been slumping since the start of the year. With more than a quarter of its outbound shipments heading to China, experts say preemptive measures need to be taken in sectors where China is increasing domestic supply, such as machine parts and automobiles. They also say new export strategies need to be drawn up and put into practice. Kim Min-ji, Arirang News.